Yo, good morning, everybody. Welcome to the Apex Brotherhood live stream. My name is Richard, and over here we have Sam. Sam, how are you?
Good morning, everyone. How's it?
You good?
Yes.
Awesome. Let's have a very quick disclaimer, and then we'll get straight into the market. Awesome. We'll get some music going for us. And then we can get straight into it. All right, I'll get a screen share up. I had a nice little trade yesterday or last night. I told Sam about it already, but I will just quickly go through it. And then I think, Sam, you have had a few gold trades today. So if you wanted to
Yes.
go through them, we can discuss those. So I'll just very quickly go through mine. This is New York Open. New York Open, we had a high and a low, which I was looking at, and then we basically made a higher low and a higher high in relation to this previous high area. I wasn't here. I was busy. We were busy with food and whatnot, myself and the wife. Anyway, we had a base area that was created. So a new upward trend and then a volumetric movement out of it. We create a base area. Price came back down into my base area. It wicked into it, started to look like it wanted to push back down again to come and retest it. The retest failed. We made a local high and a local low, which is this one down here. And then this candle over here broke that local high. The moment that happened, I entered the trade. This was a 1 to 1.5 R trade, aiming for the highs of the London session, as well as like the initial movement going into the New York session, or the open of the New York session. Played out very well. There was more in it. Obviously, price carried on going higher. There was more than enough in here for a 2R as well. But I was happy with a 1 to 1.5. So yeah, my trade very quick. This wasn't half an hour, I think. I wasn't in this trade for even half an hour. It was very quick, very good. Exactly what I
It
wanted.
was a very good trade. Almost no drawdown.
Yeah, there was when I entered into it, there was a little bit. I was like drifting around break even ever so slightly. You know, with NAS, when you enter on the terminals, I can show it on the terminal for you. You can see these two lines here, so that's the spread. So whenever you enter a sell, it will sell at the bottom price, but it will be
Yeah,
technically at the top price.
the
So
bid
you'll
price
have
was
that.
asked.
Yeah, so you'll have that little gap, and that little gap itself is the drawdown. So if you were to close the trade immediately, it will take the top price. So you'll always be in drawdown. So that's basically what was happening there. It just for a little while, and then but when it started taking off, it didn't look back. All right. So Sam, let's bring your screen up, and then we can go through a few of your trades quickly.
Yeah. So I took a trade over here. It was very neat. There was a lot of selling pressure coming in. So it was a one is to 2.25. It was very neat. It was very clean. Nothing much. It was smooth. But the second trade, which was also a sell, because gold was I don't know for what reason was dumping down today. Okay. This sell, it initially came to some drawdown, but then came back down. Uh, a sizable retracement back down, mere pips away from my TP. A retracement back down, mere pips away from my TP. I exited it. I exited it here because I did not want to, and I was lucky that I exited over here because it went back to the SL. It and it's still going up. Yeah, two trades. I raised almost 1.5% on both the trades, so I'm up 6%
Oh, that's
for the
really
day.
good, mate.
I'm
That's
up
really good.
6%.
I do like the fact that you ended up closing your trade you were at a recent swing point and it was showing that it was struggling to push through that swing
Yes.
point, like at the low of your very first trade.
Yeah.
So I do like the fact that you decided to cut it short. I think it was a wise decision in the moment.
Yeah. If you see on the 15 minute, it is almost a demand zone, and there's a good enough reaction over here. I currently my bias is still on sells, else, but if we manage to break these highs over here, if we manage to break these highs over here, then I'll shift my bias towards buys again. But right now I'm still looking for sells. I'll take an opportunity if it presents me.
So those first two trades, what was your risk to reward?
One is to 2.25.
2.25. So you were risking 0.5%, 0.25%.
Actually, one and a half. I was risking a bit more this time. Sorry,
Okay,
it was 1:2.5, not even 2.25. 1:2.5.
okay,
The
good.
RR was 1:2.5, and I was risking 1.5% on each of the trades.
So is there a reason why you were risking 1.5% when you were? You said you were in drawdown. So is there a reason why you were risking that
Yes.
much?
Actually, the thing was, the charts felt like they were moving very nice. Like my se- it, the markets were ideal for me for my setup. Today was the day where the markets were have been ideal for me, and I thought that if I am able to capitalize on today, I'll be able to get out of my drawdown quicker. Because usually when I have backtested so much, I how do I put it? I researched on how big each candle was. That and Today was the perfect moment that I found. Today's movement, existed right in between that perfect movement that I needed. That my I'm sorry, I'm stuttering a bit. Hmm.
That's okay. Take your time.
Huh. Yeah. So my system relies on trending markets, and today market moved really well. It was giving me sharp movements. It was giving me quick movements. So I thought if I'm able to capitalize on today's markets, then I'll be able to come out of my drawdown instead of trading all those ranging markets that I did. Because if you see the open also, there has been quick movement. um, the market has been dropping down, coming back up for healthy retracement and dropping down from the EMAs. So I thought today is the perfect day for me to capitalize. So I thought today I should go risk on. Otherwise, I would have taken a smaller risk like zero point 0.5 or 0.25% depending on the day. But the market conditions were way too ideal for me to not risk more.
Okay, good. So you base, or at least in your case, you base your risk not necessarily on how much drawdown you have left on your account, but more the conditions of the market. So you're optimizing your strategy based on what you're seeing on the day instead of having a set rule that you follow regardless of what the market is presenting you. So do you
You can
think
say
that
that.
that
I'm
do you
working
think
on my
that
risk
that is a
management actually.
better Sorry, do you think that that is a
Uh,
better way for you to manage your account rather than having static risk to rewards?
uh, I am actually not a big fan of static risk to reward because I feel that there are days where the market conditions or where you yourself are in a very good place and mindset that that day you should risk more to capitalize on those days. And there are days where the markets are absolutely not in your conditions, and risking more on those days is will eventually um, will not be that beneficial. So I'm uh, trying to find a sweet spot of where I can up my risk on days and where I should lower my days. So for this, where my strategy is, trending days are the best for me. I absolutely hate anything that is consolidating or ranging. So whenever I see consolidation or a ranging market, I drastically reduce my risk. And whenever I see trending markets, I get back to normal or a higher risk. Because because it comes from my personal experience. Because whenever I used static risk, it has not fared well for me. So I am the type of trader who wants to capitalize on those few days or those few setups where where the
Hmm.
conditions are absolutely perfect.
Fair. I understand where you're coming from with that. I will, however, disagree with the idea of static risk. The thing about static risk is that your expectancy is known. On a day where you are not using static risk as an example, meaning like every trade is 0.5% of your account. I'm not saying static static stop loss placements, but static risk. The thing is, if I take a trade, I know exactly how much I stand to lose. And I know that, let's say hypothetically, I have a brand new account, I have 10%, and I'm risking 1% per trade. It means that I have 10 trades. And I will have that 10 trades in a row. I can lose all 10 of them and then I'll lose the account. But if you have non-static risk and you're using more flexible dynamic risk, what happens is there will be days where you look at the market, you're like, oh yeah, this is exactly what I want. And then you go higher risk, but now you're reducing the amount of trades that you can basically lose in a row, depending on what you're going to be doing with that static risk or that dynamic risk, going from 1 to 1.5, you're reducing it by 50%. Each trade that you take, you're reducing what you have available to you by 50%. So what if on that day it looks great, but there's unexpected things that happen? Now you're going to, the next time you have to take a trade, now instead of you having your 9 trades to go with, you've only got 8.5, and so on and so forth. And the thing is, your expectancy is not, it's never guaranteed. First and foremost, expectancy is never guaranteed, but it's easier to calculate and it's easier to know what you can expect when you do enter a trade. So you have no guarantee your trade's going to go in your way. So going higher risk, I feel like, just puts more stress on your trading system. So you are reliant on good days if you have higher risk, and you cannot have multiple bad days. But with a static risk profile, you are not reliant on either one of the two. You're reliant more on consistency. So that's just my opinion on that.
Actually, very yes, yes. Actually, that is very true. The problem that I have with static risk that I personally face is that um, whenever I'm in drawdown, I really struggle with drawdown for some reason, and I feel like I have to get out of the drawdown as soon as possible because drawdown just is not the right mindset for me. I still have to learn how to cope up with drawdown. So what happens is whenever I am in drawdown, say 5% or 6% or maybe even 3-4%, what happens is I tend to reduce my risk. I tend to reduce my risk because in drawdown I do not trade to my best, or maybe my system is not faring very well. So what happens is I do not follow static risk on drawdown, so it usually takes me longer to get out of it. And in those periods of time, I'm a I I tend to get triggered by a few bad trades or a few bad days, and I start over risking and over trading. That is something I have faced. I'm still facing an issue with. So what I have the solution that I have come up with is I reduce my risk drastically and wait for the perfect conditions, and I have categorized or I have labeled what are perfect conditions for me. For me, perfect conditions are the last 25 candles should have on average a movement of 25 to 50 pips. It should lie between 25 to 50 pips. then I can increase my risk to 1.5. Otherwise, I will not increase my risk. If it is anything beyond 50 pips, it is way too volatile for me to take such high risk, because markets are very fast. So it might just hit my stop loss as soon as I enter. So whenever the markets are moving within 25 to 50 pip per candle range, then I will increase my risk. If it is below 25, I will not increase my risk. If it is above 50, I will not increase my risk either. This is something that I have learned from backtesting a lot, and it is a coping mechanism maybe for my over trading or over risking tendencies. Yes, it is like you know when you're losing on a game of poker or something like that. There are plays that you would risk more, thinking that you have a better hand. So today is one of those days where I thought that I have a better hand, and fortunately it worked my way. If it did not, then I would have probably stopped trading for today, because then I would be in a lot of drawdown, and I would have to course correct myself a bit.
So if you were saying a bunch of stuff about the static lot size versus the dynamic risk, and two things stood out to me. First and foremost, it seemed as though you're saying that the static risk sizings is what causes you to go into drawdown.
Not causes, but when I'm in drawdown, I tend to lower my risk because I'm not functioning very well, because I am in drawdown. I tend to doubt my system. I tend to, feel like I just have six more trades left. What if I lose another two in row? I tend to, double. I tend to hesitate a lot more, and then I am either losing my trade, losing my setup. So I tend to lower my risk whenever I'm in drawdown. So I'm not following static risk anyways. So to compensate for the days where I have lowered my risk, where I have played safe, I go aggressive on the days where I feel the conditions are better.
Okay, so that point that you just made now, why don't you just wait for those perfect setup days and in any way stick to your normal trading plan? So the thing is, you're talking about the perfect trading setup for you, and sometimes it's going to be in your favor, sometimes it's not. So that can lead to you either making good profit, or it can force you to go into drawdown. But then the moment you go into drawdown, you're adjusting your strategy.
Yes.
You're becoming, on the one hand, you're saying, yes, I'm taking advantage of better days. So like today, this is a perfect setup for you. You're going to up your risk. However, you're also in drawdown, which also affects you mentally. So
Yes.
you kind of have this juxtaposition. On the one side, I'm going to risk more because the conditions are perfect. But on the other side, I'm in drawdown and it's affecting my mentality and I'm struggling with drawdown. So those two things kind of like don't align all that well. So I would say in this case, if you're struggling with the idea of drawdown and you wanting to get out of drawdown quickly is not remedying anything. It's not helping your mindset for getting comfortable by being in drawdown. So there's some work that you can do internally on why it is that you feel so impacted by going into drawdown. And understand this. Drawdown is a natural part of trading. It's just one of those things. It's a natural part of trading. It's just very, very, very typical thing. A lot of people go into drawdown. Even the best traders on earth go into drawdown. So psychologically, there's this idea that being in drawdown is a negative thing, which it isn't. It's just part of the game. So the impact of that thing that is actually very normal, very typical, should not have that much of an impact on you in the long run. Ideally, let's say. Okay. So when it comes to the way that you're approaching it, it's almost as if you view being in drawdown as the enemy and you need to get out of it as quickly as possible. But then instead of carrying on with that same momentum by going with your 1.5% risk strategy, now that you're out of drawdown, now you cut back yet again, because now you're trying to conserve, which is the opposite to what people tend to do when they go into drawdown, is they try and conserve. So that's why what I'm referring to when it comes to static, it's the consistency rule. Like regardless if I'm in drawdown or if I'm in profit, I use the same risk profile, because that staticness to it means that I'm consistent across any circumstance, whether I'm in profit and whether I'm in drawdown. So the psychological impact of it is lessened. So I'm not adjusting basing on the psychological impact. I'm purely trying to be consistent. So it's just a talking point. I'm not like arguing with the way that you're.
No. Actually, what static risk allows you is to remove any randomness. So you're not basing your risk on your instinct or intuition. It is static. So there is no amount of randomness is that comes to your system based on your intuition or your feeling. How I see it, how I see trading, or how I look at it is a game. Okay, so in game, and especially I have a problem with drawdown because I struggle coming out of it. I have struggled for I don't know 2-3 years that whenever my account goes into drawdown, it more or less tends to I more or less tend to blow it. So I have a real problem with drawdown that I am trying to come out of. I am trying to not see my drawdown as my enemy and just a natural part of trading. And it is something that I will develop with. It is one of my goals of 2026. To develop a healthy mindset when I'm in drawdown. But but currently how I see trading is a game of cricket. Not sure if everybody knows
Yes,
cricket, but
I know
uh,
cricket very well. South Africa is a cricket country, so yeah.
yes. So what? So I look as a profit target as what I have to reach, and I am under pressure whenever there is. I am under pressure whenever there are when I'm in drawdown. Say like my teammates have, a few wickets have gone down and I'm under pressure, so I'm playing it conservatively right now. And then after I have settled down, after I get a bit of confidence on my system back, and I see that perfect ball, the perfect setup coming towards me, I hit it for a six, I hit it for a home run. That is how I am looking at it right now. But there's obviously a lot of work that I have to do with dealing with drawdown or the dynamic risk I'm using, because that adds a flavor of a flavor of randomness. I have to be very careful of how I do it, because if I use it wrongly, or if I use it as an excuse for my over trading or over risking tendencies, it is only going to be a detriment for myself. Alpha, I am just of the mindset that on the days that you win, I just wanna squeeze whatever I can, because yeah, that's how it is. I tend to I try to strike those perfect setups for a six. That is what I try to do, but there is um, a elevated amount of risk whenever I try to do this.
So there's two things that I'm hearing from this. I'm hearing that you put a lot of pressure on yourself, first and foremost. So you have this underlying thing on your shoulder that's pressing down. I have to perform. I have to make the best of this opportunity that I have. I have to. That's what I'm hearing, first and foremost. So a lot of the stress that you're going through is self-inflicted. So the impact of being in drawdown is self-inflicted. So if drawdown to you is a negative thing, it's because you've associated it as a negative thing. Okay. And then whatever steps you take from there on going forward is also based on that same idea that I have to do this thing because I'm in drawdown. So you're blowing drawdown up its importance. You're blowing its importance up for you a lot more than what it needs to be. Like, so understand that drawdown is a theoretical limit. So being or trading with a prop firm, that is kind of like just It's not a benchmark. It's just don't reach this. If you reach this, unfortunately, you're going to lose the account. But if you have personal capital that you're trading, you don't have a drawdown rule. What you have is, ooh, I'm busy losing money. I need to like really dial in and start like making money again. Because if I start with $1,000 account and I lose half of it, I'm not going to lose the account necessarily. Depends on the broker. But in general, I still have an opportunity to try and make back that $500 that I had lost. So it's a theoretical limit. And the thing is, we blow it up for ourselves. Oh, I'm not allowed to be in drawdown. Why not?
Yes.
It's not a negative thing. It's part of the process. It's the same ideology that people have about losing a trade. They know from back-tested results that their strategy is a 60% win rate strategy. But they get so angry and so disheartened when they have a losing trade. When they do their backtesting, they see, oh, okay, the maximum over this period that I've backtested, my consecutive losses was 3 losses in a row. Now I'm at 2 losses. Now already I'm thinking, oh, I'm already close to my theoretical max. Oh, and the psychological impact of all of that is very much self-inflicted. And I just think I'm not, like, once again, I'm not criticizing your approach, but I do feel like there's a lot of self-inflicted stressors. And it's not the psychology and the mindset, it's the viewpoint, the perspective that I think needs to be challenged. So your psychology is good, I think, because you've noticed certain patterns, you've noticed certain things, and you've tried to adjust them. But it's the perspective leading to that decision point that I feel like needs to be challenged a little bit more. So I think you're doing well. And going into drawdown and losing an account is not the end of the world, unless you've put that stress on yourself to say, I have to do this thing, and if I don't do it, I'm a failure, or if I don't do this, I'm going to lose my house. What I mean by that is just that those are stressors and impacts the way that you trade and view trading, and it's something that is difficult to overcome.
Yes. In fact, drawdown has been something that I've struggled with since the starting that I've traded. Because I have been primarily a prop firm trader. I have started my trading journey via prop firms, so I have struggled with drawdown ever since. And I'm working on it. This is not the best possible system that I can come up with. There's a lot of work that has to go that I have to put in, and but for now, at present, this is my system, and all of the points that you have mentioned, I have noted them down, and I will work on them. I'll work on them.
No, you don't have to work on them. That's the point that I'm trying to make. If you decide to do something, don't do it because it's a pressure point. Do it because there's a want, not a need. You don't need to change anything. You should want to change it because you feel like there is an area for improvement, as an example. So if I give you advice, or at least you believe that it's advice that I'm giving you, don't feel you have to do it. Feel that
makes sense.
Pick and choose and say, I would like to do this. So that's why I'm saying it's the perspective change rather than a mindset or psychological change. It's more of a perspective change. It's just how you view it. Just small adjustments. That's all. The rest of the stuff you're doing well. Your strategy works. The way that you approach your strategy works for you. It's a bit more comfortable, but it doesn't mean that it cannot be adjusted and tweaked a little bit. I'm going to quickly say hello to everybody in chat who is here, because I see there's already a few people in already. First and foremost, we've got MGN. Good morning, MGN. How are you this morning, my friend?
Morning, MGN.
We've got Annie Forever. Anirudh, how are you, my friend?
Morning, Annie Forever.
We've got Infinity. Good morning, guys. Infinity saying hello, Sam.
Hello, Infinity.
We've got Danny Vibes, or Dan Vibes. Yes, this is also this is definitely a new first chatter. How are you, Dan? Tell us where you're from.
Hello,
Tell us
Dan.
what you play. We've got Sigma FX. Good morning, all. Morning, Sigma. How are you this morning, my friend?
Good morning, Sigma.
And then we've got Wesley coming in. Hi, guys. Can we just applaud Sam's honesty and ability to identify all the things he just spoke about, how drawdown affects him, etc. Remarkable. Well done, son. Thank you very much for that comment, Wesley. Sam, do you want
Thank you,
to
Wesley.
reply?
I personally have been avoiding drawdown or working on drawdown because I just never wanted to enter drawdown. I tried to develop systems where I did not enter drawdown, and I did not want drawdown to ever come into my trading system ever. That is how traumatized I was with drawdown. And but then I worked with Richard Wells on the Discord streams on Fridays and Thursdays, and started developing systems where I learned how to deal with drawdown. And I'm still not perfect with dealing drawdown. I still mess up a few times, but I have developed a lot more. I have developed a few systems that help me personally. And it is really important for any trader to identify the weak points in their trading. What triggers them, what irks them. Because if you don't, then more or less you tend to always fall into those traps.
Yeah, so it's the idea of that thing is dictating your decisions. So you're
True.
basing your decisions on whether or not you're in drawdown. So, or your approach, let's rather say, where you don't want to give that thing the power. You yourself
Yes.
want to be the one holding the decision and the power of choice. So I will choose to do something because I want to do it, not because I need to do it. So if you
Right.
need to do it, there's no choice. Sigma saying risk psychology is opposite for me if compared to sport. When losing, defend. When winning, attack. Most football teams do the opposite. So Sigma, which football teams are we referring to? Are we talking about soccer, or are we talking about American football? I'm assuming you're talking about soccer.
I think Sigma FX is talking about soccer here.
Yeah, most probably soccer. So they say the best defense is a good offense. So the idea is attack, attack, attack. If you keep on attacking, your opponent is forced to defend the whole time. And a good offense will eventually break down a good defense. But also the inverse is also possible. A good defense can break a really good offense. The idea is just that the approach for trading from a sports analogy point of view is it's that chase. You're chasing a target because you're behind. So in this case,
Yes.
the other team is up 2 goals and you have yet to score one. You're going to be forced to either defend more aggressively and then wait for your opportunity to attack and take advantage of that opening, or you're going to completely switch what you've been doing and completely go over into attack mode and just full send. So the same idea is then, instead of being conservative while being in drawdown, you're trying to be more aggressive, like what Sam was doing. Even though he's in drawdown, he just waits for the perfect opportunity and then, slots in a lot more risk. So, but once again, it's a two-sided sword. So the idea is just as much as you're attacking, there is a chance that you're leaving yourself open to one mistake and it's over. So what was your drawdown? You mentioned you made 6% today. What was your drawdown amount?
I was down 5%. I was down 5% for quite some time right now, and I felt like today was, the markets were just moving beautifully as I imagine in my dreams they are. So I upped my risk today.
Okay, so the two-bladed sword, or the two-sided sword analogy in this case is, what if today was not a good day? you assumed it was. It looked good.
Yes, yes,
Then you
yes.
would go from you would go from 5%
If
to -6.5%, as an example.
Yes, if I was in -6.5%, saying imagining that the first trade was a loser, then I what my approach would have been is I would not have traded any longer today because I already lost 1.5% and I only have 3.5% left to trade with. So I would uh, I would come back to charts tomorrow, execute my plan, nothing else. No random trades. I do not follow others. Just execute your plan. Just take your trade at 0.25 or 0.5% risk. Just and I will use the profit of the day to say I have taken a trade of 0.25% risk and 1:2, then I am in profit for the day of 0.5%. The next trade that I'll take will be I'll risk 0.5%. I will risk the profit of the day. If I lose, then I'll again go back to 0.25. But if I win, then I would have made a 1.5% on a 1:2 system. Now, mostly since I made 1.5% for the day, I would stop there. But if and I'll go on to the next day, I'll again risk 0.5 to 0.25% and use the profit of the day. I'll still be using dynamic risk, but I tend to use the profit of the day as that extra cushion for myself. I do not want to go to any more drawdown, but it is possible that I go to more drawdown, and I'll consistently use 0.25% risk until I come up and get to use the profit of the day to come out faster.
Fair. Like I said, I not criticizing it whatsoever. I think your system works for you with reason. So you have an approach that works for you. I don't, like I said, I don't think the approach is the problem at all. I think it's the perspective. So
Yes.
drawdown should not, because it's a natural thing, part of trading. Why blow it up? Why emphasize it? Why make it this big thing? And I think that's the approach that needs to be changed. Wesley saying, if we're talking football, your attack wins you games, but your defense wins you titles. So that's like it's the battle versus the war. So you might win a few battles by being very aggressive, but you're going to win the war by being strategically defensive. Let's rather say. We've got Marina. Good morning, Marina. How are you, Marina? I haven't seen you in a
Hello,
while.
Marina. Long time no see.
I see gold is starting to show a potential shift in its direction. So we have a high point over here. Obviously, there's high points all the way over here as well. But for the most recent structure, we have a high point right over here. And we have a low point. We've come into a area where we've already had a singular reaction that pushed price higher. So we've got a low, we've got a high. We've made a lower high in relation to this previous high point, but we've also made a double low. So low attempt followed by another low attempt. So if I just zoom in, you will see it a little bit more clearly. So we have a double low, basically, which is still a lower low. But from this double low point down here, we have started to push up. Now, if we were to continue having downward pressure on gold purely in this area over here, we were supposed to see price not take this lower high that we had over here, and instead maybe created a lower high down here and then re-push down again. But what we've had is this lower high has been taken, and we have created now a higher high in relation to this previous low point, high point, sorry, this lower high, which is then also then followed up by an opportunity. So when price tried to push back down again on this base area right over here, it failed, and we had a follow-up attempt again, which also failed. So to me, we are now busy producing, or at least we already did, produce a higher low in relation to this previous low down here. So this structure is no longer applicable. So this higher low and this low down here. So this now becomes, sorry, I can probably have just done this. This now becomes the low. This is now no longer applicable. This is now no longer a higher low. We can delete this one. We now have a higher high over here. So if you draw this one back and you compare it to this point over here, this is now a higher high. This is also yet again another high, and we've also got this high point over here that just got broken. So this is also now no longer applicable. So we've got higher highs across the board, and we've got higher lows, and we've got a base area. So in my mind, there is a potential for us to start pushing higher. Where can we come and test? First and foremost, I think this area right over here makes the most sense. It is the closest, it's the most recent attempt, let's basically say, for price to try and push volumetrically up, and then it just kind of like tanked down. We had a base area, it started pushing down lower as well. This is the area where this upward momentum broke pushing lower. So this whole area over here, to me, is a breakpoint. And a breakpoint to me is just a fancy name to say that we have a change in direction. We have a change in character. So, or change in structure in this case. We had higher highs, higher lows, low, low, high, high, high. And this was the first time where we did not produce a higher high, but instead produced a lower low in relation to these points over here. So that then is the structure shift. So we're having the exact same thing in this area now. We're also having a structure shift right now. So breakpoint, so we have a new breakpoint, and that breakpoint is from the lowest portion to the very first time that it broke a low, or at least did not produce a new a lower high. So in that case, it is this whole movement here. This is the breakpoint. So I'll just bring it forward. This is the whole breakpoint. You can take it to the higher low point. That is break. I want to see how it reacts when it does come back to this point. This could be a very short-lived attempt to push price up. If we go onto the higher time frames, you can see whether or not it's a stronger push or not. I'm feeling more that this might be a attempt to try and push price higher back up to these points. What do you think, Sam? What are you seeing in the market at the moment?
Yes, I feel the same. I think it is an attempt to get to the highs, and I have shifted my bias to buys. I'll be looking for a good amount of retracement into maybe around here, yeah, right about this area for longs again. And because for me, as soon as these highs were broken, my bias is shifted to buys. I was taking sells all along this morning. So right now I'll be looking for buys, and I think I think that price will reach these highs, or the it will most probably it will definitely break these highs. And there is potential that they reach these highs and react off it. But, uh, but if you see, this is a very steep. It is a very steep descent, and right about here, right now, we started showing signs of sells again. But I think that the buyers will step up, and will break the highs again.
Yeah. So the way that I see it is, it's the potential. It's not
Yes.
yet there, but there is this potential for it to try at least. So I always talk about this arm wrestle back and forth between the buyers and the sellers. And at this point right now, this is where the buyers are really pushing hard against the sellers, because we're seeing a little bit more follow-up bullish candles. We're seeing opportunities where the bears tried to push price a little bit lower and it failed. So we're already seeing points like that. So it's not guaranteed that we have completely shifted to a bullish bias. apart from the fact that right now there's a lot more resistance. So we want to see that break point. We
What
want to see
I
when it eventually breaks it, you
yes,
know?
what I tend to do to avoid myself into falling those traps is I like everybody should do this. I think you should wait for the candle to close in whatever time frame that you're looking for your setup. You should wait for the candle to close because if a closed candle shows a lot more strength, a lot more story than a candle which is forming. So I tend to ignore the candle which is forming, and I only focus on the candles which are formed, the candles which have happened. Because if you see at the 15-minute time frame right now, how uh, if for a few minutes before, if we saw the 15-minute time frame and we thought that, oh, there's a lot of buying pressure, that this is a big candle, but right now if we see it, it is a big wick, which tells us that there are still sellers who are trying to sell. So, focusing on the candles that have happened, focusing on the closed candles, gives us a better chance, or gives me a better chance at trading.
So the way that you were explaining it now, I'll put it in a different way. If you are basing your lows and your highs on candle closures, then you should do the same thing following for an open candle. Wait for the time frame to close, because you're basing your swing points on candle closures or data that has already been presented. So when it comes to the 15-minute, this kind of reaction that you're seeing all the way over here, you do have this area over here from which it is reacting. So it is the last attempt to push price higher, and then a price started pushing lower from that point. You're already seeing a reaction, which makes sense. So sellers are coming in here because here sellers did take over completely. So buyers tried to break this newly formed downward attempt. They tried to break it. They failed at this point, and price started volumetrically pushing lower. So it makes sense that you're going to have a reaction there, or at least it makes sense to expect a reaction at that point. Now, if I, while this candle was still open, decided no, it's definitely going to sell off from here because it had the same reaction there, and I'm not waiting for the candle to close, I could be wrong or I could be right. Okay.
Yes.
But the wrong and right doesn't matter. It's the confluence. It's the what gives the direction more confidence. It's the fact that it does close in a specific way. So in this case, yes, there was sellers, but where's the follow through? Where's
There
the
is no
follow through to push this price lower? Right now, there's no follow through. I will wait for the candle to close to then confirm or deny that follow through. So right now, it doesn't look like there's follow through. Is there going to be follow through? We'll see once the candle is closed whether or not there was actual selling pressure here. That's how I view it. I wait for the candle to close because I base my lows and my highs and my swing points on candle closures. As simple as that. It's that consistency. So I'm not going to use a break while the candle is still active. I will wait for it to close. While you were discussing, or while you were explaining what you were looking at, Louis came in saying, "Morning, guys. Good morning, Louis. How are we this morning, my friend?"
Good morning,
Good
Louis.
So,
Rich, are you
yes.
looking at anything else?
You know me, mate. I only look at that's not supposed to be
Nas.
higher. That's supposed to be higher. I only look at NAS. We are at an area where we've recently had a reaction. I'm just waiting to see how NAS wants to react in this area right now. This is on the 15-minute. So this is the highs of the London session. So we had a rally, a base, and then another rally. So this is a very typical base. I want to see the reaction off of this base area right now. We have a high point and we have a low point, and I'm just waiting to see whether or not we're going to form either a lower low or a lower high, or a higher high in this case. So I want to see how we're reacting. So I'm just being patient. I'm just trying to not react impulsively and rather react decisively. So right now, just waiting. We are seeing a little bit more. We had a slowdown during the evening, very curved. We're starting to print lower highs in relation to the high that we had over here. Lower high, we've got a low, lower high, lower low, lower high, lower low, and so on and so forth. So right now we are definitely in a descending channel. But because we are at this area right now, I can't just blindly enter because we're seeing slowed movements in this area. So if I go down to the 5 minute, you'll see it a little bit more clearly. We're seeing a bit of consolidation. Yes, we're trying to break out, but the consolidation, you take the full range of movement. So I'm just waiting for that. If it starts pushing lower, I can remove that one. If it starts pushing lower, I can start looking for areas to try and test. However, if it fails breaking through and it instead starts presenting bullish momentum again, I will then start looking for areas to potentially come and test. First and foremost would be the high of the day, would be over there, as well as recent swing points where there was volumetric reaction, like over here. There was volumetric reaction. So I will wait for that in general. And that's what I'm waiting for right now. Just sitting on these hands and not doing much, just waiting for this. Hopefully people aren't going to complain about the fact that we're only talking and never trading, like we had yesterday with the Fiverr stream.
I'm also looking at USD JPY right now.
USD JPY.
Yes. If this 15-minute candle closes as an engulfing candle, if it engulfs this candle, then I'll be looking to short it. With the SL somewhere right on top of somewhere here, and TP targeting lows. Yeah, but I will wait for the candle to close. I'll wait for the 15-minute candle to close. If it engulfs the whole candle, including the wick, then I'll be looking to short it.
So this exact point where we are now, to me, looks like a very good. I'm just going to show it quickly on my screen. It does look to me like a very good supply/resistance, support/resistance zone. So we have multiple times where there was reactions off of this exact area. So we have a little bit of consolidation here, or at least slowed action. It didn't break above that point as yet. We have a wick with a bit of a reaction, wick reaction, breakthrough, retest, continue higher, wick reaction, wick reaction. We have a base area created here. We have another base created over there, a larger base over there. We have price volumetrically pushing into it, wicking below, and then reacting off of it, and so on and so forth. So to me, this is a pretty decent area of support/resistance. It just kind of like changes as price is like moving through it. So right now, you're talking about the potential of selling.
Yes. But I'll need it to be an engulfing candle which engulfs the wick also.
That is true. I'm just going to go over to the hourly and then let's see what we're seeing on the hourly. Let me just switch off all of this so that I am not informed by that information whatsoever. Okay, so we have swept yesterday's high point. Just swept it and started volumetrically pushing lower from there. We have yet to sweep... no, that's not yesterday's low. This is yesterday's low. We have yet to sweep yesterday's low. It does look a little bit more bearish just based on that, the fact that we've swept the high and then had this very nice reaction off of that on the hourly. Let's have a look at the 4 hourly. 4 hourly, we are still a little bit more bullish, even though we have this high point all the way up over here, and now we've technically created a lower high. We have these low points here that have follow up higher, so higher low, higher low, higher low, higher low as well. So higher time frame, it feels like it is potentially a little bit more bullish. So you're seeing something more like this, even though these are very far away, you're still seeing... that was a horrible line. You can still see that a little bit more as well. So we have these little channels that's currently in play. Let's just take the most recent ones. Something like this. We had a little bit of a nudge above. Yeah, I can see the potential for sells, but only on the lower time frame. I'm not seeing much on the higher time frame just yet. We've got this area over here that was just missed. We have a reasonably strong base area over here, or order block, where price reacted very strongly off of and was reacted upon once, and then failed to test a second time. Not bad. This is a whole engulfing. Maybe I take that whole candle, then it will make sense, but I don't do it like that.
Having aligned time frames increases the probability of a success, but uh, on the contrary, it is very difficult to find all the time frames aligned.
Yeah, true.
Yeah.
But you have to decide
We,
which one carries the most weight for you
yes.
of those time frames.
For somebody who wants to risk higher like me, who uses dynamic risk, if they have aligned time frames, then like the 4 hour is aligned with the 15 minutes, the 15 minute is aligned with the 1 minute, and then maybe they can look to up their risk. I think there are few traders do that, but yeah, have those scenarios where everything is aligned, it is a very rare case.
Yeah. That's why I'm saying, like, you can have these divergences where the higher time frame is showing it's more bullishly, the lower time frame is showing a little bit more bearishly, or it can be the inverse. It doesn't really matter. The point is being that wherever you decide to enter and whatever you decide to use as your confluences, have them be consistent. So I can't today say, okay, I'm only going to use the 4, 1, and the 15 minute for my trading, and then tomorrow I'm saying, no, I'm using the daily, the hourly, and the 5 minute. So keep that consistency across the board for your trading. At the end of the day, I think it's going to be a little bit more. It's going to be easier for you to follow your strategy if you know that the steps in your strategy is already lined out properly, and that you're not diverging off of the road as often.
Consistent inputs give consistent outputs. So when you're putting in consistent inputs, it's you'll get to know whether the system itself works or not. If you're putting in the consistent inputs, if you're taking the trades as per your plan, even if you fail the count, or even if you do not pass the problem challenge, and so what happens is, that this system does not work that well, or maybe you have to go to a new system or something like that. But if you're having randomized input, then you get randomized output, and you don't know what to work on. So having some form of consistency is important for us to learn more than anything.
Yeah, it's always a learning curve. We've got Pooley in. Good morning, Pooley. How are you, Pooley? We've got Unbiased Trader.
Good morning, Puli.
Unbiased,
Good morning,
Unbiased
Unbiased
Trader.
Trader.
Live with humanity, act with purpose, commit to the process, do the right thing, care deeply, let success emerge. I like that. That's an interesting way of looking. Well, it is always an interesting way, but like the idea is do the right thing. We don't always know what is the right thing to do, but I do like commit to the process and act with purpose. So if you're going to do something, do it with purpose, do it with intent. If you're going to do the right thing, that kind of sometimes you have a moral basis for that. Sometimes there's no moral basis for what's right and what's wrong. It's more of like an emotional feeling of what you think is right and wrong. But I do like this. Let act with purpose, commit to the process, let success emerge. The only way for you to become successful, in my opinion, is to act with purpose.
I actually liked the snippets that Unbiased Trader provides. Every morning he puts a good message, like the quote of the day or the statement of the day. I actually like it very much. Thank you, Unbiased Trader.
Yeah, I also like that. It's like that morning dose of motivation.
Yeah. Mm.
Okay,
So
so
USD85, it did not engulf the whole candle, including the wick. If it, if it had, if the candle closed below the wick, then I would have entered into a short position. But since it did not do that, I'll be waiting. Maybe it will give me an opportunity to short it, or maybe it will just, drop down. We never know. Yeah, nothing much for me to trade anymore.
okay,
Uh,
so we have a strong push attempt on NAS, pushing lower at the moment. I do like this, so I am going to put in a little sell. First, I need to confirm. Where I'm going to put my stop loss. It's going to be a little scalp, I think. Okay, I'm happy with this. Okay. Going for a quick little one-to-one trade. If it loses, that is okay.
So where is your stop loss? Where did you? Is it above these highs?
It's just below that high point. I will show it here quickly. So there's the entry.
Mm.
Entry is over there. I wanted to be in on the close of that candle, but a little bit slow. But yeah, so just over here, I don't mind that wick point over there because we've already had a attempt to push price higher, which we failed. So technically, I'm above this swing point over here, and I'm just aiming for a one-to-one right now. This is a 0.5% risk trade, so aiming to make $26 on this 5K. If I look on the 15-minute, there is still the potential that we can just like wick here and start pushing up because we're just at this low point, but there is the potential to come and reach down here, which I would kind of like. I would kind of like it if we started pushing lower down to there. But a one-to-one for me is fine. I'm happy with that.
I think NAS really starts moving in one direction when it starts moving. Like it is really quick. That is something that I really like about NAS. You're in and out very quickly. There's nothing. There's not a lot of consolidation usually. Yeah, but in off market timings, it does consolidate quite much.
Yeah, the thing is, NAS is a trending asset, so it chooses a direction and it goes in that direction at least for a few hours. So if you do have choppy action where it's up and down and up and down and up and down, it's generally because it's waiting for some sort of influx of information. It's a little bit indecisive, but that happens not all that often, I think.
Yes.
Unbiased Trading saying, welcome. I am glad you guys like it. Yeah, we do. Like when it comes to inspirational things, not every person is going to find the inspiration in it, but it's not for them. That message is not for them. It's for the people that find the inspiration in the message. So the message can be a little bit more personal, I think. So I like the morning messages. Unbiased is saying, if you guys like NASDAQ, you will like DAX too. Now, the thing is, I have been considering looking at DAX quite a bit, but because I am not familiar with it, I will have to go and sit and kind of like play around with it. I've been spending a lot more of my time like focusing on NAS and trying to get NAS sorted out in mentally for myself. So I haven't really even looked at DAX at all.
DAX also tends to move a lot. DAX is like the NAS of London session. How I look at DAX is the NAS of the London session.
Okay, so that's 27. I do have a area here on the left that could potentially be tested first. I do like the way that it's moving right now. So it's looking decent. So I will keep it to this 1-to-1. Not going to be greedy, even though I think that it can potentially come and test all the way down here on this green box. This green box is based on this turning point over here. So this little bit of consolidation and then a push up from there. But this is the very first base area to be tested. So just gonna be patient. Not going to be greedy and try and steal more from this than what I believe is the most theoretically, like Will always say, low-hanging fruit.
Yes, low hanging fruit.
Yeah, this is a low-hanging fruit trade.
Well, Rich, as we were talking, I have like my EA has entered a trade on gold. It's a short position, and it is
Okay.
doing pretty well.
Okay, let me go on to gold.
Yeah.
So you see now what I meant by that follow up.
Yes.
Yes, we had that wick, but when we had the opportunity to try and push price higher, failed, and price started pushing lower. So this is good. This is a good sign, or this is one of the reasons why you use the idea of waiting for the candle closures and don't just like jump in on something because you think, yes, now it's the time. You know.
Right about now, I am also at break even. My stop loss is at break even right about now. Oh. Like I said, these are the conditions I like. When
Mm.
the markets are trending really well in one direction or the other.
Yeah. I mean, gold technically is not trending at the moment all that strongly. On the lower time frames, yes. On the higher time frames, we have a little bit more.
Yeah,
Of
on
a
the
pull.
higher time frames, we still have to make a decision. We still have to pick a direction. But
Yes.
based on the fundamentals, if somebody is looking at gold, this is a good drop. They can buy the dip at some point, which they think is the right area to buy it from.
Okay, so this trade of mine is sitting roughly 0.25% in profit at the moment. Just let it play.
Rich, do you think? Did you ever think of developing a system for ranging markets?
I do have a ranging market strategy, but it's based on GU, and I don't trade GU anymore, or at least I've moved away from GU. So I haven't used that strategy for at least a month and a half now. So I do have one. I genuinely don't like consolidating markets. It's I'm one of those people. I like momentum. I like going into a trade and being in a trade very quickly, done and dusted. You know, that kind of like thing. So
Yes.
ranging markets to me tend to be very sideways, and it can aggravate me to no end being in a trade for 2 hours and it's 4 to 5 pips movement. You know, that just annoys me to no end. So I like ranging as well, but I like momentum. I like when we establish a trend and we show continuation of the trend. That's what I like.
some people, they mark the low of the range and high of the range, and they constantly keep buying and selling, buying and selling. And it works for them, but it, I never get enough conviction to do or play such kind of trades. We are having a healthy
Uh,
decrease. I expect it to drop from here, but seeing the like we reacted off a good point. We reacted off this area over here. But and if we break these highs, then it's probably going higher. Probably, not sure. I would have exited over break even right now if we move any higher. Yeah, waiting to see what market does.
so where it is right now, it's also at a base area, but you're this is
Yes.
on the one. So I don't tend to
Yeah.
like
Yeah. Uh,
use the 1 minute
what?
for bases. It's 5, 15, 1 hour, and 4 hours that I use for my bases. But it was at least at that point at a base area
Yes.
on the 1 minute.
Mm. And I am
In
out.
That's unfortunate, but at least it's break even.
Yes. A slight profit, $10 profit on the 5K.
Excellent. Unbiased Trader saying the footsie good for ranging. It's very sticky, he says. I'll have to have a look at the UK 100. I don't really look at it at all. MGN saying I should put my Orb EA on my older account for the Euro AUD trades. You can try that. MGN has been trading Euro AUD, saying that it does conform quite well to the opening range breakout. So, yeah, go for it. My NAS trade is drifting around break even at the moment. Little bit of a pullback as yet, but it's still fine. Wait, let me just mark up where my entry point was on this. 25565.
Rich, what is your opinion on exiting on break evens? Do you think it is based on the system that a trader does?
So I have a problem with break even closures because first and foremost, it's never break even because you're always kind of like taking into consideration spread, commission, and all of that kind of like stuff. So in general, when it comes to break even, people see it as, oh no, I'm going to put my stop loss at my entry point. And then they're like, that's a break even trade. It's not a break even trade. You've lost money. That's the first thing. The second thing is it skews your results because you look at as you're looking at it like, okay, wasn't a winning trade, but I didn't lose money either. So where does that information fall? So it falls like in the middle. It's not winning, it's not losing. So it skews the overall data that you have. That's the second thing. The third thing is you're not allowing your trade the opportunity to play out. So you haven't locked up any profits whatsoever. All you've done is you've just reduced your risk, but you've not locked up anything whatsoever. There's a better way, in my opinion, to manage break-even trades, or at least in this case, cutting your risk shorter, and that is taking risk off of the table. So if
Taking
I'm
partials.
in, yeah, taking partials, take a partial, and let it, say, okay, then I'm taking a partial. I've locked up some profit, and if it does go back and take out my stop loss, then I've got a smaller loss than I would have, taken this complete loss. That's how I see it as well. So I just think that in general, people when they take break evens and stuff like that, it's generally not break even, and you're still losing money on the trade itself.
Yeah. How I do break evens is take into account the commissions and the spread, and what even Richard Wells tells that why he does not like the concept of break even. He thinks if you are entering into a trade thinking that is a good place to enter a trade from, there's a there's a possibility that it bounces off from the same point again.
Break even
But
bounce.
yeah, But how I look at it, for my system, how I look at it is that I am I enter whenever I think the momentum is shifting, or I enter at the places where I think there will be significant momentum pushing the trade in the direction that I want. So if it is
Mm.
coming back to the position where to the entry point, more often than not, I tend to think that the momentum has died out, or the it is not as strong as I expected it to be. I entered my
Yeah.
break even after whenever I enter into a break even trade, I trail it after a certain number of pips. It is mechanical how I get my trades to break even.
Mm.
So I made it a part of my system to reduce, to increase my win rate. Not exactly win rate, because break evens, as you said, do not fall into either camp. But to conserve my capital, and take to survive on another for another trade. That is how I look at it as.
Yeah. I like that, but then it's the idea of you have to lock something up. So you're conserving capital by conserving risk, or at least
Yes.
managing risk. Because in any trade, it's unrealized profits until it's realized. So you're not conserving anything if you haven't taken profit off of the table. And then it's the same idea with when you were talking about you only risk your profits of the day. That is a way to conserve capital. You get a win or two wins, and then you play with the winnings. So your initial capital stays untouched. Bar you do have wins. If you don't have wins, then obviously there's no capital to reserve. You're trying to get back to break even and then get into profit and then conserve capital. You can't conserve capital that you're losing. Uh, Michael Anthony saying the metal and inner sector the metal and minor sector needs a strong correction, or I can't buy at these levels. When it comes to gold, interesting. I think I'm not a fundamental trader whatsoever, so I don't look at the fundamentals when I enter a trade. I'm purely technical. But I do think that there is space for the fundamentals when choosing to, when to trade and how to trade. Blending it, I think, is good. So, Michael, when you're talking about the mining sector needs a strong correction, you are wanting gold to push lower, getting a fairer price, and then getting in on a buy for gold. Unless you're talking about a completely different asset. But I'm assuming you're talking about gold because we were talking about gold specifically. Unbiased trader is saying, I don't trade FTSE as it's good for 1-to-1, which is harmful for my trading psychology. I like 2R strategies. Once again, preference can really impact psychology, especially if you're not getting a certain something, because you're putting the value. You're saying a 1-to-2 is much better than a 1-to-1, but realize that it on itself means nothing. A 1-to-1 risk to reward means nothing on its own. You need more information. You need win rate. You need expectancy. So those are the things that I find matters more than just the risk to reward in of itself. I don't know what your opinion is on this, Sam.
I really think matching your trading strategy to your psychology is very important, and because a few traders would like to be in position, swing trades where they are in it for hours, and if it is a loss, they don't mind it either, and if it is a profit, they don't, they're happy. But I particularly cannot swing trade, because after being in a trade for hours and investing so much of my mental capacity, you know, uh, closing the trade at break even or taking a loss would really affect me. I would feel like 7 hours on a single trade, and it only ended up to be in a loss. It is something that I am not comfortable trading in such systems. So many people are, many people might be. I am comfortable trading intraday systems of anything between half an hour to 1 hour, or slightly longer depending on the trade. But I do not like to be in trades for hours and hours on end.
I'm the same. I really don't like being in a trade all that long. But it's because of the fact that I don't trade fundamentals. So I know that on the technical side of things, it can change very often. So I go into a trade with a certain expectancy. That expectancy is met or it's not met. Well, technically, my expectancy is always met. It's either going to be a win or it's going to be a loss. So my expectancy is always met. But when I'm in a trade for much longer time, I start putting doubt into whether or not it's going to reach said expectancy. Yes, there's still the idea it's going to be a win or it's going to be a loss, but the variability of that wins and losses changes it for me, because I'm not going in on 0.5% trade and making 0.5% risk to reward on a 1-to-1 as an example. What I am doing, however, is I am pulling my take profit higher and higher and higher, and I exit on a decision point rather than it hitting a stop loss or a take profit. Well, stop loss is going to take me out regardless. But that's just how I see it. I'm sitting close to almost 0.3% on this trade at the moment. It's still going slowly. We are getting closer to the end of the stream. We have, what do we have here? On the 5 minute, 2 more minutes before this candle closes. It looks okay. 15 minute, we've got 7 minutes before it closes. It looks good as well so far. So where am I sitting equity wise? Yeah, this if I close it now, I would have taken back what I had lost yesterday, which is fine as well. I don't mind that. Just going to be patient.
And about fundamentals.
Talking about fundamentals?
Yeah, talking about fundamentals, what Michael said about the metal and mining sector needing a correction. Now, I do not particularly trade using fundamentals, but I do follow them. And what I have got to know is that silver, because the price used to be a bit lower than what it is right now, exponentially lower than what it is right now, uh, the mining process of silver was not profitable. So mines were shut down because the cost of mining and the cost of processing does not give you a profit at the end of the day based on the market price of silver. But because silver is in such high demand right now, and because of the price that silver is, there are closed mines, or mines which have stopped mining silver, starting to reopen. And
Yeah.
I think Samsung was the company which leased a few mines, or got into a contract with a few miners to get silver from them. I think silver will have a correction whenever it has. It will have a bigger correction than what gold does. Gold has been just gold has had smaller corrections, and maybe a few months of ranging, but I don't think gold will have a big correction per se, because gold is something that governments are backing. Governments are because of the uncertainty around the world. I do not expect a huge correction in gold anytime soon. But then again, we trade what we see and not what we think.
Yeah. I've closed that trade, so I have taken back what I have lost yesterday. So I am back up to 1.5% in profit, which I am very happy about. I wanted to bring this up. Also, if looking at NASDAQ, you want to look at the US tech stocks and trade via Trade the Pool. I think it will be helpful. I have signed up and signed it up to this, and so far it's going good. I know that MGN is trading with Trade the Pool. You guys saw yesterday as well. He's also very much a tech bro, so he's also been focusing on Nvidia, Intel, MSN, all of those like tech-heavy companies, which is a good idea because I'm only focusing on Nasdaq. So I think when it comes to futures, when the futures opens up with the fibers, I'll get myself a futures account and I'll only trade the NQ like minis and micros, probably micros to start with. And then I will most probably also get myself a trade to pool account and only trade this like that correlating. So across all three of my portfolios. Now, this might seem like a stupid idea because you're not diversifying your portfolio. You're basing it all on one industry as an example, which a lot of people will say, no, that's not a good idea. You must diversify. But in my mind, it's more the idea of it's that speciality. I'm focusing on something and I'm making that my speciality, and I'm building an empire on this speciality, let's rather say. Unbiased Traders followed up by saying, I'm concentrating on Tesla and NVIDIA only, US tech stocks. Exactly. And like I said, MGN is doing the same thing. He's only focusing on tech stocks as well. And I think his is going well as well. I don't know what his latest trade was doing, but I think it's good. And then Unbiased Trader then followed up that by saying, beauty in trading is it will accommodate traders' preferences as long as you treat it with respect. I like that.
Rich, what do you think about the possibility of an AI bubble? Because you know if you have followed the tech industry or the dealings in AI, you will notice that Oracle sends buys from Nvidia. Nvidia then has stock in Oracle, and they 4 or 5 companies have formed a closed loop. So, do you think that there is a possible AI bubble, and did you take that into account?
So there's this heavy push by a lot of the tech companies to go into AI. So the CES is this week, and I've already watched a few videos on the information that was shared there. And in general, NVIDIA, Intel, they're all focusing on AI. So they're putting all of their stock into AI. Now, they have incentive to do that because they're heavily invested already. But going into the future, they're also viewing it as we have to carry on putting money into AI because we've already invested as much as we have. If they're just going to stop investing into AI, they're kind of like shooting themselves in the foot. So they're kind of forced to carry on investing into AI. Now, I don't necessarily think that there's going to be a bubble that bursts for AI, particularly. What I do think, however, is that it's all going to come to fruition at some point. That there's going to be a kick against this whole, let's call it insider trading, let's call it fraudulent money circling, I'm paying it to you. Because technically, at the end of the day, all of that proceeds that we're seeing, all of the profits that these companies are making is very, very, very open to interpretation. The information so far is that self-investment that they're doing in each other and buying stocks, and the money is just flowing from one to the other and then back to the first one, that is technically fraud. It's cyclical motion of money.
Yes.
So when they do release information saying that this is profits that they're making, it's not really profits. There's no growth, really, if you're looking at just the circular motion of it. That I think is going to come to turn. I think that is the thing that's going to come and kick AI in the backside at some point. I don't think it's going to be anytime soon, because I think that there's still this very strong drive to invest in data centers. There's still this very strong drive to invest in AI. But what's going to happen when people start looking at AI and realizing that it's worthless? Or they look at AI and they realize, oh, well, this is kind of pointless. Or they're going to get to a point where they turn around and say, you know what, this is just not for us. When that is, I don't know. So no. Long answer. No, I'm not taking that into consideration because I don't think that it is something that is going to happen anytime soon. Yeah, that's just how I view that. We've got Sam Shah. How are you, my friend? It's interesting how everyone is talking about an AI bubble and not realizing that an entirely new infrastructure is being created, which would eventually pull all other sectors up into it. That's exactly like the long-winded way that I was trying to get to. It's just like there's this very, very strong push into AI. and a
Actually,
bubble
it's
only
true.
works when people realize
Life
that it's
before AI and
fictitious.
after AI has been very different. You know,
Yes.
yeah, because you can see key differences in how AI has changed a lot of industry or a lot of how we uh, how we do things.
Mm.
Stack Overflow used to be a major website where you get where you find tech solutions for any problem that you face. After ChatGPT has come into fruition, the monthly users or the monthly problems that have been put up in Stack Overflow has reduced drastically because everybody is using some form of AI.
Yeah.
So AI has definitely changed a lot of how we do things. Kids are
Mm.
doing their homeworks from AI. They are not necessarily going to any websites like Brainly, which used to be there at my time. Yeah, AI has definitely changed a lot. It is just that we are looking at it from a lens of what has happened previously. The dot-com bubble, the
Mm.
housing bubble. Such an exponential rise has always had a a fall, not an erasure, but a fall. So we are looking at it from that perspective. It might be a bubble. We are not sure if it is a bubble. That is where I came from.
Mm. Yeah, I think that there's also the idea that if you look back at the dot-com bubble and you look at the housing market crash, that was a bank and loan slash
Yes.
debt issue.
Yes, yes.
That was
It was a lot
all
of
built.
bad debt, and the people just made more mortgages out of mortgages that already existed.
Yes, so it's very much the idea of it was debt related. I don't think that the AI bubble at the moment, if it is even a bubble, is debt related, and
Yes,
but it is heavily invested related. So we're putting a lot of investment into AI stock at the moment because there's a very big, or whether it's fabricated or not, but it's a very big push for it. So you're creating demand for it, whether or not the demand was there naturally or not. Anyway, Sam, with that, we have come to the end of today's stream. I want to thank Sam for joining me today again. Thank you very much, Sam. Really appreciate your taking time out of your busy schedule to come and join us. Hope you enjoy it.
the pleasure is all mine. Right.
Awesome. Anything from you before we sign off?
There's this one question that unbiased trader asks: Why is futures better than CFD? I think that is because futures provide a better return on investment than CFD firms. And so, like you get currently in the market, you get a 50K account for $77 with a profit cap of $1,000. So it has a better ROI, in my opinion. All right, bye Marina, bye Louis.
So, guys, we're going to be live every day this week. If you haven't already, drop us a like, drop us a subscribe if you're new here. We really appreciate it. We're doing this free, so that is how you can repay us. Just be active in chat. We try and get to all of the questions that we can. We start every day with London Open, and we stream for an hour and a half. We will stream tomorrow and Friday as well. For those of you who are not on the Fivers group as well, we will trade tomorrow again, or we'll be live again tomorrow. But for everybody else that's with the Fivers, we can head over there. Myself will be live again in 2 hours' time with the Fivers. Everybody else, we'll see you there. Have a great day. We're done for the day. All right, guys, have a good one. Cheers.